Hello everyone and welcome to the Quantpedia Explains Trading Strategies video series. Today we will discuss portfolio diversification including art as an alternative investment.
Hello everyone, my name is Radovan Vojtko, I'm head of research and CEO at Quantpedia. Today we will discuss art. Why should we discuss the art? Art is more and more popular among the wealthy investors. I mean, it's not easy to obtain, it's not easy to buy, and it's very hard to get indirect exposure to diversified art investments from the traditional financial kind of the view. I mean, you cannot buy easily the art ETF or art future. The art is still the hit among the wealthy investors because you can buy the art and you can look at it, you can place the picture on your wall, etc., etc. And the art has a low correlation with the traditional assets like stocks, real estate, gold, or fixed income securities. Art is very highly illiquid and it's very challenging to value art correctly. But I mean, still over the time, over the lot of the years, price of the collectibles, so the rare vintage items like paintings, rare alcohol, fashion, or stamps, it usually goes up. Now the question is, what is the value of the art in your portfolio? I would like to show you one paper which is exactly trying to answer this question. So what is the value of the art in a diversified portfolio, and can we diversify our portfolio with the art when we include it? So this is the paper written by Baro, Basso, Funari and Vicention in 2023. I mean, what is the added value of the paper is that they were able to use the index and they try to run the mean variance optimization, and they try to find out what is the place of the art in the portfolio and how much art should you have in the portfolio. So if you remember, I don't know, a few weeks ago we tried to answer the question how much Bitcoin should we have in the portfolio, and in this case this researcher tried to answer how much art should we have in the portfolio from the mean variance point of view. The researchers are using the art index called AMR-AAI, and that's the added value. I mean, here is the index. The index is not tradable, but I mean it's one of the few indexes that has like weekly data. They are able to calculate the portfolio optimization, so they can quantify how much art you should have in your portfolio. What is still a problem with the index is that the index ignores the transaction costs, which are really high in the art market. Then there are further costs arising from the holding of the art, so the storage, insurance, etc., etc. It's not so simple to hold the art in a portfolio, and you have a lot of the costs, and those costs are higher than just holding some financial asset. But I mean, when you run the portfolio optimization, what will you get? So you will see that it makes sense to include the art into portfolio. Your performance or expected return can be higher, and your volatility standard deviation of your portfolio can be lower. The most significant reason for that is because the art has a low correlation with other financial assets. But as I said before, I mean, there are some other problems connected with it. Now the question is, I mean, how much the art should we have in the portfolio? I mean, they try to run multiple optimizations. At the end, they try to run the financial assets together with some alternative assets like real estate or gold and art, and they try to set the boundary to 5% of the total wealth to each of the alternative assets like real estate, gold and art. They realize that the portfolio is better when you include those alternative assets, and that they try to run what would the portfolio look like if the investor had to allocate up to 15% of his wealth into one alternative assets among the gold, real estate or art. And from that, the result was that he should invest in art. It allows him to get the portfolio with the lowest volatility and the highest return. As I said before, I would pay high caution because there is a problem with art regarding the insurance and regarding the cost of obtaining the art. So it's not so easy to invest into the art. There are a lot of the other indexes. You can try to run this analysis by yourself. You can find the index for that MAR-AII index. So that's the price index of artwork sold at auction worldwide from 1978 to 2023 on Statista. So the link is included in the description, but it's a yearly performance. So I mean, the yearly performance is not so useful as monthly or weekly performance. And there is also the art price index. I mean, the art price index is the index of the blue chip artists, which covers the most respected and the most expensive artists. I mean, those indexes that are based on the most expensive or the most known artists are usually outperforming the S&P 500, or they perform very well. But the problem is that it's very hard to invest into those indexes because, I mean, there is no financial instrument that tracks the art index easily. And if you want to buy the paintings by yourself, I mean, it will be extremely expensive for you because, I mean, here is the list of the artists in the index. I mean, there is Pablo Picasso, Andy Warhol, Claude Monet, etc., etc. I mean, it will be really, really complicated to obtain the performance from the index because you would have to own art pieces from all of those artists. There is also another art price global index. I mean, this is the probably better index that shows the performance of all of the art that's sold through the auctions. Here we see that the performance is not so stellar. So, I mean, the art market is really, really concentrated. So there is a significant difference between the price of the, let's call it the blue chips painters and blue chip art, which is this equity curve, and between the average price of the art, which is this equity curve. So I mean, when you see this is the equity curve of the art and this is the average price of the average art, and you see that it doesn't make sense to include it into your portfolio. So it really depends what you can obtain. And if you can obtain very, very expensive top artists, it makes sense to invest into that and to diversify your portfolio, but it doesn't make sense at all if you would like to buy some average artist and hope that it will diversify your portfolio somehow. You will not get the returns that are needed at all. This is our point of view. I mean, those indexes are freely available. You can run your own calculation. There is another interesting thing that I would like to mention, and it's that the art index is extremely seasonal. There is a yearly seasonality in art because the biggest auctions are usually performed twice in a year, and there is a significant spike in the prices around the time of the auction, and when there is no auction, the price of the art is usually lower. There is another problem with those indexes, so they are highly seasonal. So I hope that you like this article. If you are interested, I really recommend you to read the original paper. It's really worth to spend the time if you are interested to invest into the art, and I hope that you will join me in the next video. Thank you very much.
Are you interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.